Hey everyone, John here from School of Trade. Today we're going to be taking a look at a long trade here on the S&P, getting in off of the lows of the range. So the entry point here, 2174, and I really don't want to see the market come back against this position at all. So my stop is going to be really tight, just getting it underneath this low. And actually, even with that said, I like it underneath the candle that got us in right there, nice and a little bit tighter. Now, what I'm looking for here is at least a 1-to-1, so we need to make sure that we get that. And the 1-to-1 is at 76.25. But if we zoom out a little bit here, we can see really what's going on. We hit the lows from yesterday and found a massive amount of rejection. And that huge rejection is really what I want to use to my advantage. So we know that in this case, the sellers are obviously not interested in this price at the lows. If they were interested in selling high, they would have been doing it inside here, and this massive bear candle should have been able to drive back down to the lows, and it didn't, right? So the fact that they failed to go back down to the lows, and when they tried again a little bit later, that even failed continuation and turned back up. Now we have sellers trapped in a situation that they do not want to be in. So I'm looking to go against them, knowing that their stops are going to be above, and I'm looking for their stops to drive the market a little bit further up. Now, above us, aside from the fact that we have resistance at the prior, the swing highs, which is currently the high of day, the next area of resistance is up here at 77, and that's the big level that I'm going to be gunning for right here. One level of concern, again, drawing from left to right here, we have that little bounce that we had down here, and then we found resistance there as well. So I do need to make sure that I take some profit off at this area here because it just makes sense, right? That's kind of that's the situation that we're in right now. So we'll find the best fit for that area. Looks to be right through there at 76.03. Now again, from our stop to our entry point, that means that our target has to be a little bit higher just to make sure we get that 1-to-1. So I have to go one tick above it to 76.25. I'm going to be taking 2 contracts off there. That's the 1-to-1 target. And then the final objective is up to that major area of resistance above, which is at 77. So that's going to be my final objective. Now, normally I'm not really a big fan of, taking multiple targets like this, but in the circumstance, knowing that we at least lock in a 1-to-1 and the fact that the magnet of that massive resistance above us at 77 is likely to hit, everything just kind of points to the upside. It's only a slight difference of maybe 3 ticks or so, but that 3 ticks, you do that 100 times in a year, it's going to make a pretty big difference. So our entry point, 74.25, looking for 76.25, 2 points away here. We're only a couple ticks away from that. Once we hit that, my stop is going to lock in a little bit tighter to break even, and then we're just waiting for the final objective for the market to get drawn up to that magnet at 77. So we'll give it a little bit of time here. We may be able to get this fill sooner than later. We're seeing a lot of bullish pressure coming in, likely due to the sellers getting stopped out and driving the market up. But we are going into lunchtime. We're going into 11 o'clock. The markets tend to slow down a little bit right now, and that can cause things to get a little funky, right? As people leave for lunch, you start seeing the volume drop a little bit, and then that means that the volatility usually goes up a little bit as well, and it looks like that's kind of what we're seeing here. So we'll give the market a little bit of time here, see if we can get the drive up into that target, and we'll be back in a little bit. All right, testing the target, big pop through there, nice little pop, got the target filled. Now we're going to move the stop down to 1 contract. Stop goes to break even to lock out all of the risk. We locked in a 1-to-1 already, so it's a risk-free trade now. Stop goes to break even. You could lock into break even plus 1, but I want to try to give this as much room as possible. If the market is going to pull back on itself, it's likely going to come back to that last swing high. So I want to make sure that I'm a couple ticks underneath that just as sort of a buffer. Worst case, though, we get stopped at break even. We don't make or lose anything except commission on the final portion there, and the 1-to-1 kind of covers that. So the final objective up at 77, we may get that on that next push too. We're already 1 tick away. So with that 1 tick away, because we have come 1 tick away, I will lock in a little bit tighter. Wasn't expecting all that to happen on 1 candle, but hey, we'll take it. So now we're just waiting for 77 to fill. Just above us, that is a magnet that should draw price up to it, but again, giving the market a little bit of breathing room just in case it wants to pull back to maybe test that prior swing high, maybe this prior swing high. Either way, give it a little bit of room, stay out of its way so it can drive back up and hopefully get those objectives above. So we'll be back in a little bit and see if we can hit them. Seeing the market pull back, holding that 75.25 area and turning back up. And now we're at a double top again, back at those highs. So because of that, I'm going to lock the stop in a little bit tighter here just to make sure that we get something out of this last portion other than just a tick. We are also 1 tick away from our target again. And there we get the push up in the fill. Beautiful little pop higher there. Must have been a lot of volume driving into that 77 area. But again, that's the importance of paying attention to these magnets. Yes, we did lock into 1-to-1, and just that by itself is a phenomenal trade. That's really all you can ask ask for in these types of situations. But every once in a while, if you're trading multiple contracts, you'll see an opportunity for an extra few ticks like this that allows you to be able to look for a slightly wider target, get those objectives filled at the upside. So just a beautiful move up, gorgeous example of the prior swing low, the major prior swing, right? That prior low a day completely falling apart. Massive buying pressure up, looking for the continuation for the secondary leg back towards the highs. And that's exactly what we got. So that's going to do it for me. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.